All right. Good evening, traders. Thanks so much for tuning into the weekend wrap. My name is Corey. It is April 11th, 2021. All right, let's see what's going on in the news as of the last week and this weekend. So, in the big news, China fined Alibaba a record $2.75 billion for anti monopoly violations. According to Reuters, the Alibaba business empire has come under intense scrutiny in China since billionaire founder Jack Ma's stinging criticism of the country's regulatory system in October. And I'm sure that I wasn't the only one that saw that there was a whole bunch of rumors going around about Jack Ma supposedly having gone missing and nobody's seen him for like weeks or months or whatever. I don't know. I mean, I haven't heard any news updates in that regard, but I mean, given the way that things can be over in the East sometimes, yeah, I'm not overly surprised. The fine is equivalent to 4% of Alibaba's 2019 domestic revenues. Regulatory agencies in China stated that they were abusing their market dominance by preventing their merchants from using other e commerce platforms. Not a total surprise there, but I am all for having, a fair, free, open market. So, um, apart from that, cryptocurrencies are currently soaring, the most notable gain being XRP, which gained 30.86% on Saturday. So this was a big reaction to a recent SEC lawsuit against Ripple, XRP, alleging that the firm had been an unregistered security since 2013, and therefore every Ripple sale in the 8 years since constituted an illegal securities trade. So this has to do with I can't remember. It's been a while since I took business law. It was the Securities Act of 1933, I think it was. So basically, the reason why it's really controversial is because, Ripple has been, if it's been around since 2013, they had quite a bit of time in order to bring this to court, so to speak. And the SEC has a quote unquote responsibility to provide due and fair notice, which 8 years is certainly not due. In any event, this provoked numerous exchanges to delist the currency from their platform. However, it won two minor lawsuits and had rumors of settlement, and that caused XRP to blow through the roof. Bitcoin also gained 4%, and Ethereum gaining just over 5%, respectfully. Most notably, Bitcoin did break back above the $60,000 mark. I haven't checked on it since yesterday, but it seemed like it was struggling to hold above the 60K mark just a little bit, at least when I saw it yesterday. In other news, an Israeli study found that the new coronavirus strain found in South Africa can, quote unquote, break through Pfizer's vaccine to some extent. I don't know. I remember looking at the Pfizer stock as of last week. It looked like it had a really good bull run. I have no idea if this will create a pullback or any reaction, but it's something to keep an eye on. And Q1 earnings begin this week, and analysts have raised their aggregated EPS estimates by a record 6% for the S&P 500. This was bolstered by the improved economic backdrop so far in 2021 and greater spending following stimulus. The strongest revisions were The strongest revisions were in energy, with financials coming in second, as higher interest rates yield greater profits for lenders, meaning banks. Big banks will be among the first to report, with J.P. Morgan, Goldman Sachs, Wells Fargo, and Morgan Stanley all reporting this week. I think maybe it's U.S. Bank Corp as well. Here are the upcoming events on the calendar for this week. So Monday, tomorrow, we don't have anything major going on. Tuesday, we have core CPI. So, of course, if you don't know, the Consumer Price Index measures the change in the price of goods and services. So this is a very big, inflationary indicator. If we look here, this is the core CPI over the past year, and it's really not shown nearly as much of a reaction as far as inflation goes than I think was, people had suspected. So. It looks like the previous was a single percentage point, and it looks like it's supposed to go up to 0.2. This is the month over month for March. Wednesday, we got crude oil inventories as always. Thursday, we've got initial job list. Looks like unemployment is forecasted to come down, but it has kind of been just stuck in this 700,000 range. Um, this is hard to tell where we're at. Of course, you can see this is the unemployment claims have come way, way, way down, but we've really just kind of been stuck in this range here around the 700,000 mark. We also have core retail sales and normal retail sales for March. Of course, retail sales constitutes like 70% of the economy, so you're going to want to be paying attention to that. And we have the Philly Fed Manufacturing Index as well, and building permits on Friday. So, okay, as far as earnings goes this week, nothing major coming in tomorrow. Tuesday, we have, I think it's pronounced Fastenal, ticker FAST. Wednesday, that's when the big banks are coming in with JP Morgan, Wells Fargo, and Goldman Sachs. Thursday, we have United Health, Bank of America, Pepsi, Citigroup, Charles Schwab, BlackRock, and I think, if I remember correctly, U.S. Bancorp is reporting Thursday as well, but they're sub $100 million, or excuse me, sub $100 billion market cap, so I didn't list them. And then Friday, we have Honeywell and Morgan Stanley. No major IPOs this week, though. All right, so let's take a look at the sector analysis for last week. So the strongest performers, and this is the S&P 500 that we're looking at right here. So Microsoft and Adobe did really well, as well as Nvidia, and I think that's Intel, right? Yeah, I'm pretty sure. I don't trade equities. I'm at equities primarily. I'm a futures trader, so don't judge. Apple absolutely crushed it with an 8% net gain last week. Also, Google coming in at 6.62 and Amazon. So overall, things were just large caps absolutely crushing it last week. The weakest performers were Johnson & Johnson and the energy sector. So we have ExxonMobil and Chevron right here. Oil overall just, I think it rebounded with an immense amount of strength coming out of the, kind of like the corona dip, so to speak, and it just got it rebounded with so much strength that we're currently kind of just in a period of neutrality or consolidation. Let's take a look at the ETF heat map here. So of course, like I said, strongest sectors were large caps, gold miners, consumer cyclicals, and tech. And then the weak sectors were all the volatility instruments, emerging markets, China. I'm sure this has partially due to the sanctions. Energies, where are my energies at? Here we are, and healthcare. So, yeah, and then bonds are really just kind of flat. A little bit more bullish than they were last week, but haven't seen any big major moves. The only thing I will point out is that gold had been really, really weak for quite some time, really since we broke from the $2,000 per ounce level, and this is the first indication I've really seen of it starting to stabilize or rise again. So here we are in the overnight session currently for the S&P futures. So you can see Friday, like a lot of closes lately, we closed on a spike. So we just need to wait to see where we open for tomorrow's regular trading hours to see as per whether or not this strike will be confirmed or not. As it stands right now, we're really just kind of in balance. I'm watching the S&P here in my other monitor. We do have a little bit of a weak low, so this kind of started to sell off into kind of like a shoe formation almost. So we do have a weak low right down here, but the main thing is I really want to see the base of the spike hold right here. So just above the 4100 level. I think this is about 4103. So as long as the RTH doesn't probe significantly beyond 4103, I'm going to maintain my bullish sentiment. If we do break back down here, I will basically look at this level, 4103, as kind of my initial line in the sand. But my final is going to be if we are breaking below this low volume node, below Friday's POC. So point of controls like this, it's not uncommon for them to be revisited, but I always pay attention to the value area rule, which basically states Well, never mind. It doesn't really apply here because we didn't break out of balance. So never mind that. Moving on. All right, so this is the daily chart of the S&P futures. So last week, I was looking for us to pull back in the overnight session. See, on last week we closed in a spike as well, so you can see the pattern here. So Friday we closed on a spike, and I was looking for us to pull back to the base of the spike and then rally upwards, taking out Friday's high, and it most definitely did that. So let's see here, which was Friday. I'm trying to get my bearings here. I can't tell. I changed some of my levels and everything. I can see that we have this period of consolidation, which is right here, and then we have 1, 2, 3. I think this was Friday, and then we opened. I think we had these two subsequent because this was Thursday, and we had a holiday. So, anyways. So the only thing I'll point out here is that this composite POC right here has not been retested yet, nor has Friday's POC. I am looking for this base of the spike to hold. These are the two levels like I was talking about. So I will maintain my bullish bias, but yeah, we're way overdue for a correction. In any event, here's some trade ideas for this week. As far as last week goes, Neo, I was looking for a short here, and it really didn't pay off all that well. It just mostly traded sideways. And then Chevron and Solaris Oilfield Industries, oil did not, albeit the setup on these was really not bad at all. We've got an inverse head and shoulders here. And in any event, these just kind of drifted sideways just because of the weakness in the oil markets. So although I do think that these setups, this is starting to show some weakness to me here. It's about to put in a weak low. Ultimately, I think these would have been good setups had oil not been as weak as it was last week. So. Any event for this week, coming setups. So this is the SPY, and you've got two different options here depending on what plays out. So this is a 1 hour time frame, and I'm primarily looking for a pullback to this trend line, and so this would be somewhat of a mean reversion type play. So this would be a very short term, maybe between 1 and 3 days short. And then looking for a retracement to this trend line, and then to get it back in long. So ultimately, this $400 level, getting that good retest there, I think would be a reasonable entry point as long as it holds. So, and then Palantir here, this looks like a fairly decent long. You can see that we had this strong gap up, and we're consolidating. A little bit of a weak high going on right there. So. I'm just basically looking for us to break through this resistance here at 24.38 and potentially take out this, or at least retest this pivot high around 27 bucks. Last but not least, I wanted to pick one of the bank stocks because, of course, the financials earnings that are coming up this week. So this is on Goldman Sachs. This setup is a little bit murky. It's hard to say which direction this is going to take. So, this would be a great straddle or strangle. God, it's been a long time since I've traded options. I'm really just kind of breaking the ice again. But in any event, with the revised earnings that have taken place so much in the financial sector, I really feel confident that Goldman's gonna probably beat earnings. That being said, though, the market can do anything at any time. Rest in peace, Mark Douglas. And it's always good to watch your risk and hedge when possible. So anyways, I am looking for a long here, primarily looking for a retest of this previous pivot high, but like I said, we'll have to see what happens. Anyways, so my for the key takeaways here, I'm primarily bullish bias, presuming tomorrow's opening withstands the base of the spike at 4103 on the S&P futures. I'm not worried if we probe beyond it once. But if it's continually trying to hit down into the base of that spike and it starts to trade down into the area from Friday's POC, I'll probably switch to a bearish bias and I'll be looking for the correction that is long overdue. So note that Wednesday is major earnings day for financials, and analysts, like I said, they did have those revised earnings projections. And then Thursday we have retail sales, which might get a boost from stimulus for the month of March. So, all right, guys. Well, that's all I got for you. Thanks so much for tuning in, and I will be on tomorrow at 6 a.m. Pacific time for the morning brief. I look forward to seeing you guys then. But in any event, take care. Good luck tomorrow, and we'll see you next time.